Hi, Jesse Allen, president of 55 Plus Lending, here with our RATE family of companies. On an earlier video, I talked about the importance of using reverse mortgage purchase financing to convert non-buyers into buyers and help them get into that forever home. Now I want to talk about helping older homeowners age in place by connecting housing, safety, financing, and family caregiving.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
As mortgage originators who serve the 55 and older demographic, we are not just helping people access home equity or refinance a loan or buy a new home. We are often helping them answer one of the most important questions of retirement. Can I stay in the home and in the community I love safely, affordably, and with the support? For many older adults, the answer is yes. They want to be able to stay. 2/3 of adults say they want to remain in their current communities as they age. Remember, the other third want to move, and that's what purchase financing is for. This makes our role bigger than a transaction. It makes us a part of this age-friendly housing conversation. A home is more than an asset. It is a major determinant of health, independence, and quality of life. But here is the challenge. Most homes were not built for aging. The Harvard Joint Center for Housing Studies estimates that only 1% of existing homes include the 5 key accessibility features: a no-step entry, single-floor living, halls and doors that are wide enough for wheelchair, lever-style handles, and reachable electric controls. Additional studies put the number at just under 4%, are suitable for even limited mobility. What this all means is that many older homeowners are living in homes that worked well for them at 45 or 55, but may not work safely at 75, 85, or beyond. And the risks are real. 1 in 4 adults age 65 and older reports falling at least once each year in the home. Falls are the leading cause of injury-related death among adults 65 and older. And fall-related medical costs are estimated at $50 billion per year. Again, $50 billion with a B. So when a client says, I want to stay in my home, the next question should be, what would help make that home safer and more livable for the years ahead? Aging in place rarely happens alone. Family caregiving is now the core of elder care in America. Recent reports show that tens of millions of Americans are caring for adults and adult family members. Between 24 and 38 million Americans provide unpaid care to adults 65 and older. Care often requires a longer duration than expected. 28% of the time, it's a year to 4 years, and then 29% of the time, it's 5 years or greater. 1 in 5 caregivers provides 21 hours or more of care a week. Now, by the way, the average caregiver age is 51, and nearly 2/3, 61%, are women. Also, many are working. More than half of employed family caregivers report arriving late, leaving early, taking time off because of caregiving responsibilities. Most of us can feel that the pressure points that come out of this. All of this matters for mortgage professionals because housing decisions affect that entire caregiving ecosystem. A safer, more accessible home or using equity to pay for at least part of an in-home care can reduce strain, not just for the older homeowner, but for the spouse, the adult children, the relatives, and all of the paid helpers who support them. So what can we do? Well, we do not need to become a healthcare provider or contractor or social worker, but we can become a more informed guide. Here are 5 practical ways to help. One, you can ask better discovery questions. So instead of focusing only on the loan purpose, ask questions like, do you plan to stay in this home long term? Are there stairs or bathrooms or entrances that are becoming difficult to access? Have you considered future caregiving needs? Is a spouse or adult child or caregiver involved in the plan? Are home modifications a part of the reason we need to explore financing? These are all questions that can help uncover the real goal behind the transaction. The client may not simply need cash today. They may need a safer bathroom, a ramp, a first floor bedroom, better lighting, or funds to support in-home care in the future. So reframe equity as a part of this planning conversation is the second thing. For many older homeowners, home equity is their largest financial resource. If used responsibly, it can help fund improvements that support aging in place. The key is not to present borrowing as a quick fix. It's to connect financing and the financing conversation to the broader aging plan. Third, include trusted family members and advisors when appropriate. Because caregiving affects families, many clients benefit from involving trusted people in the discussion. That may include adult children, a spouse, an attorney, financial planner, a housing counselor, or care manager. Always respect privacy and get consent, but when the homeowner wants to include family member, it can lead to better decisions and fewer surprises. Fourth, build a referral network. You can add tremendous value by knowing who to refer clients to. Consider building relationships with certified aging in place specialists, occupational therapists who perform home safety assessments, reputable contractors who are experienced in accessibility modifications, elder law attorneys, financial planners, your local area agencies on aging. Again, our job is not to solve every issue. Our job is to help the client find the right resource before a crisis happens. Age-friendly, livable communities begin with homes that allow people to remain safe, connected, and engaged. For homeowners age 55 and over, aging in place is not just about staying put. It's about staying well. It's about reducing fall risk. It's about supporting family caregivers. It's about using housing wealth thoughtfully to preserve independence, dignity, and choice. As mortgage originators, we may be one of the first professionals to hear, I want to stay in my home. When we hear that, we need to recognize the opportunity. We can help clients think ahead, ask the right questions, connect with the right resources, and consider financing options that support a safer, more secure future. Because at this stage of life, the best mortgage conversations are not just about money, they're about home, health, family, and peace of mind. Thank you.